What's up, guys? I'm Mike from StockedUp. In this episode, we're going to go over all the top news and plays that we are watching in the market for this week. We're going to talk about everything that happened over the weekend and what to watch out for the week ahead in the stock market. So if you guys are new here, don't forget to subscribe to see our daily videos on your YouTube homepage every single day. But let's get right into it, Tom. So what happened in the market over the weekend?
Yeah, Jerome Powell is actually going to be speaking on Thursday morning, and he's going to be giving new implications for monetary policy and the Fed's anticipated policy framework review, which is how they're going to be pretty much allocating money into different bonds and, pretty much working the markets up like they have been over the past few months. And this is going to be some pretty big news coming out Thursday morning. They're going to be holding one of their little annual conferences that they have, but the biggest thing is that Powell will be speaking there on the monetary policy, and that's going to be big news coming up Thursday morning. And then really, as the market waits clarity from the Fed, market pros are expecting less from Congress after first anticipating a stimulus package by early August. It really seems like that this package is going to be locked up in Congress for quite a while. And it says Democrats and Republicans have been far apart in terms of contents of the package. One hot button issue is that the $600 supplemental weekly aid for unemployment that the Democrats want, it's going to be expiring on July 31st. So it actually already expired, or it expired July 31st. But Republicans want to cut that $600 check down to $200 a week, while Democrats want to leave it at $600. And meanwhile, the White House, they went ahead and passed that executive order that's going to provide $300 a week in aid from the FEMA funds. But states have to still process those payments, and some of the Democratic states just aren't going to process the payments because they want the payment, to still be $600 a month. And really, it's just going to be a big deal, like with this getting stuck in Congress, and it's really going to put more eyes onto other things. And I think a lot of traders are going to really start to take their mind off of this news for a while, at least for a month or two, until traction starts coming back and they actually get this passed.
Yeah, so a quick little summary. Pretty much Democrats and Republicans are still arguing about the stimulus package, and Powell, which is the Fed chairman, is speaking on Thursday morning. So in the past, Powell has a very significant influence on the market. He doesn't always move the market up or down when he speaks. Sometimes he speaks and the market literally does nothing, but sometimes when he speaks, he has the ability to really, really rocket up the market or almost crash. I mean, I don't want to say crash it, but have a pretty big negative influence on it. So sometimes he moves the market, sometimes he doesn't. But either way, it's good to listen to his speeches just to get a more in-depth understanding about what's going on with the economy and pretty much what's going on with the stock market and everything like that. So. And then what happened with the Apple news, Tom?
Yeah, there was some big news actually with Apple and Epic Games. So as we've heard, I think Apple went ahead and banned Epic Games last week from their App Store, and so did Google Play, I think, as well.
Well, hold on, Tom. Just to interrupt real quick, Epic Games is the company that owns Fortnite. Just to give a little information.
Yeah, Epic Games is the creator of Fortnite, and this is going to be a big deal because pretty much Microsoft warns that they're going to potentially be suing Apple for blocking Epic Games, because it's going to really hurt Microsoft, because Microsoft is now unable to use Epic Games' Unreal Engine, which is the engine that they use to pretty much generate graphics on Fortnite. And you can see I brought up a little picture here to show you what Fortnite kind of looked like, but it had pretty good graphics for a cartoony type of game, and a lot of other games use this same framework to make their games with, and it's called the Unreal Engine 4. And there's been a bunch of different iterations of Unreal Engine, and it's pretty much how they make video games. It allows them to create the three-dimensional graphics that you see on screens, like when you play games or whenever you see cartoons and stuff like that. And really, they license out this engine to companies for a fee, and right now these companies are unable to use it, like Microsoft. And Microsoft actually filed a declaration on Sunday with a court, and their engineers said that pretty much allowing Apple to block this is going to deal significant blow to them, because they're not going to be able to make games. And I think it's going to be a pretty big deal coming up for Microsoft and Apple. I think we could see maybe one of those heated court battles go on.
Yeah, right. I mean, Apple just exploded up last week. I mean, they crossed $2 trillion of market cap. Like, that is insane. They were the first U.S. company to do that, and that they're mainly running up because of the split news and like the anticipation with the new iPhone coming out. But I would say more important than anything else, a lot of it is just like a bubble almost. Like, people are just riding this split news and they see the momentum. We're seeing a blue chip stock like Apple up 5% in one day on Friday. You know what I mean? Like, a lot of it is just like FOMO, you know what I mean? Fear of missing out. So people just buy in, and then drives the price up, and then more people buy in, and then more people buy in, and then more people buy in, and the price just gets higher and higher and higher. So I would say that is the biggest reason why Apple is running up so much. Like, yes, they have split news, but at the end of the day, the split doesn't change the market valuation. Even with Tesla, yes, right now these companies are exploding up on the split news, but really the split is not going to have an impact on the company's market valuation. So now with the Tom, if you want to talk a little bit more about the Apple and Tesla splits.
Yeah, pretty much Tesla's going to be splitting on August 31st, and Apple's also going to be splitting on August 31st. And there is some stuff on like TD Ameritrade's website that says you must buy Tesla by, like, let's just say, August 25th, for example, before, you have to own it on that date before you'll actually be allowed to get the split. And I'm not too sure if that's actually going to be true or not. There's been a lot of people talking about that if you buy it after the split, you'll still get the shares whenever it splits. And then there's been people saying that you have to buy it before that date in order to get the split. But I've been seeing people say both sides of it right now. And I think it's, it's just one of those weird situations where I think that they need to have better clarification on their wording for sure, like on their website, especially TD Ameritrade.
Here, so there's a lot of fake information going out right now, just in general. I'm not saying with anything specific. I'm just saying in general, pretty much with these splits, with Tesla and Apple splitting, that is not going to affect the market capitalization at all. There's no opportunity for arbitrage. You're not going to get a 400% return because Apple's splitting and you're going to get 5 more shares or 4 more shares or whatever. With Tesla, you're not going to get extra shares. What's going to happen is, with Tesla's example, right now Tesla is at, let's just say, $2,000, right? They're doing a 5-for-1 split. So if they're at $2,000, the share price, which is $2,000, is going to be divided by 5. So the share price will go down to around $400. And what's going to happen is the total shares outstanding, which is like the supply, is going to be multiplied by 5. So at the end of the day, the market capitalization is going to be the same. The only thing that changes is that there will be more shares out there. There's going to be 5 times as many shares as there are now, and the share price is going to be divided by 5. So pretty much there's no magic one in a lifetime.
Like, I'm talking about the record date, like how you have to hold the stock by a certain date to get the split.
Yeah, for sure. I totally understand that, but I'm just saying in general, there's no opportunity for like a crazy return here. Just the shares are going to be split, and there's going to be more shares to trade. So hopefully that clears everything up for everyone. But if you guys are still confused, just leave us comments down below, and we'll go more in depth into this situation in tomorrow's video. So now with the momentum plays for tomorrow. So with the first play, we are looking at Apple. Apple is up over 5% on Friday, really running up, breaking all-time highs, huge relative volume. What levels should we be watching for Apple for tomorrow?
The biggest number Apple has ever hit, $500 a share. If it breaks that tomorrow, I think Apple will definitely run up.
Yeah, absolutely. I mean, really, I would not be surprised if we see Apple like cross 500 in pre-market, and then maybe like consolidate and just wait for that breakout in the middle of the day. So if Apple does break 500 with good momentum, we would definitely like Apple calls. With the next play, we have BABA.
Yeah, Alibaba, they're really nearing all-time highs as well. I believe their all-time high was around 268, so just make them break 268 to the upside, and this one is a great setup. I love this one.
For sure. And that also is to the upside. And then last but not least, we have NVIDIA.
NVDA. Make them, everyone's sitting around a key number here, it looks like. Make them break 512 or 512.50 to the upside.
Yep. And again, we are looking at it to the upside, all three of these plays, but only if they break above the levels Tom listed. So now for today's Discord member of the day, and it is Leo Valdi. So thank you so much, Leo, for being a great member of the Stocked Up chat room. Always sharing great information, great news, and positive vibes. So thank you so much, Leo, for being a great member. So now for the unusual options activity for this week, we are looking at the Apple 520 strike call options that expire this Friday, August 28th. There was just under $17 million put into these options on Friday. I mean, it's really a tough call. You know, I feel like Apple's in a make it or break it situation. They might just keep on running and, you know, breaking new highs like we've seen them do for the past, you know, couple of weeks. But I feel that since it's $20 out of the money, I would never be one to short Apple call options. And really what I think this unusual options activity is, I think there's a strong possibility that there's someone or some institution that owns a ton of Apple shares, and they're just selling these 520 strike call options as covered calls. So they're really in a win-win position. So that's how I interpret this unusual options activity. But either way, feel free to keep an eye on the Apple 520 strike calls that expire this Friday, August 28th. There's just under $17 million put into the play, but you just have to be careful to make sure that you know, there's a good possibility that the people behind this trade are shorting the option. So definitely be careful with that. So now with the comments from the previous episode, with the first comment we have YOLO saying, any thoughts on SPCE? Thank you guys. So what do you think?
Yeah, I mean, SPCE, I have actually been liking it the past month, but I have a long-term trend line drawn on my chart, and they actually kind of popped right below it. So I actually took a small loss on SPCE. I went ahead and bought, a few hundred shares right whenever it hit this trend line at around, I believe, 1775 was my price, and I ended up selling out at about 1730 or 1740 once it crossed the trend line to the downside. So really it broke my long-term trend line. So I'm now going to be bearish on SPCE, at least in the short term. I do think that they have a lot of, potential in the future to at least hit $42 a share again. But with space tourism and stuff, that's going to be one of those hot subjects that it's going to get hot for a little while and then die down and then get hot again. So I think once more space news and stuff like that starts coming out and we really get out of this virus, I think then SPCE can finally start to thrive. But until then, I'm going to be bearish on them just based off of my technicals.
For sure. So bearish on the short term, but bullish for the long term?
Yep. But the long term, I'm talking like a year plus out.
Gotcha. All right. With the next comment, we have Brian saying, thanks for the analysis. I look forward to this every single night. Thoughts on Uber and Lyft and banks in general? So Uber and Lyft had the good news with California on Thursday, right, Tom?
Yeah, they had that good news on Thursday that pretty much a judge told them that they are allowed to keep their workers as contractors and not have to classify them as full-time employees. And Uber and Lyft were both pretty much just going to suspend operations in California and quit doing business there. So that was great news that they could continue doing business in California, at least for the short term. So both of those stocks went up. I think that we could definitely see some upwards momentum based off of that news. I know they were kind of flat on Friday, but I still think that they had just such a significant pop on Thursday that they just had to be flat on Friday. But I do think that they can still pop this week, though.
For sure. And then also he was asking about banks. So I was actually, I'm looking at the Dow right now. Give me 1 second. So yeah, I like the JP Morgan stock and the Goldman Sachs stock for the bank stocks. I really do not like Wells Fargo. They are not in a good position right now. Like if you look at Goldman Sachs, they made a decent recovery from the lows back in March. But if we look at Wells Fargo right now, so Tom, if you pull that up, WFC, they're actually lower than their lows back in March. And I feel like they're They're not in a good position right now fundamentally, while Goldman Sachs and JP Morgan are in a better position. You can get a higher, like there's a better risk reward scenario right now with JP Morgan to the upside. They didn't make quite as strong as a recovery as Goldman did, but Goldman is, I would say, a little bit more safe. So
How do you feel about Bank of America?
that's the one that Buffett's holding, right?
Yeah, I think he bought a little bit more of a position into
Yeah.
it.
I mean, I like it. Honestly, I just really haven't done too much research on Bank of America, but I do remember Buffett got into it. I thought he sold something recently, though, too. I can't
Yeah, Bank
remember.
of America can actually be a little risky just based on how low of a price it is. Like if it falls, 5 points, you're looking at, a 20% drop within a few days. So really, I think Bank of America, I would definitely go with JP Morgan or Morgan Stanley or Goldman Sachs,
Yeah,
sorry.
Goldman.
Morgan Stanley.
For sure, for sure. With the next comment, we have Kadir saying, "Hey, Mike and Tom, great show as usual. I love your show and Discord channel. I've been a stat modeling member for the last few months, and it's been nothing short of awesome. This is the best group I've ever been a part of." With that being said, I do have a question for you guys. So he said he has an Apple 400 strike option contract expiring in 30 days. He says he's up huge on the contract, about 9,000%, and I'm looking to cash in at about 10,000%. I'm worried about the Apple split. Kindly let me know what will happen to my contract and the strike I have. Would I lose value? How are they splitting the options contract? Please let me know your suggestions. First off, thank you so much for the very kind words and amazing question. So I'm sure a lot of other people have a question like this, and there's really no simple way to answer this. So just judging based off of the context of your specific scenario, you are up 9,000%. So I personally, I would really consider getting out, especially in this scenario. You really hit this one big. So first off, I would definitely take profits and run with this specific scenario. I really wouldn't hold off to 10,000%, especially considering this week. I think there's a decent chance that we might see some sort of pullback with Apple. But overall, to answer your question, so what's going to happen with splits with Apple and Tesla is the option contracts are going to become what's called a non-standard option. Now, if your expiration date is before the split date, which is August 31st, right, Tom?
Yeah.
Okay, so if it's before that date, your options are just going to be normal. However, if your option is after that date, some weird things are going to happen. So all the options clearing boards and everyone, all the organizations that like handle the administrative work and like decision making with options are going to set procedures for what's going to happen for Apple's split and then Tesla's split. So there's a lot of different ways to settle non-standard option. There's really a lot of different ways. So I don't have the specific details for the Apple and Tesla split options right now, but there's a lot of different ways you can get like less shares. You can get the shares settled like in like different forms. There's just a lot of variables, and there's no easy way to answer that question. But my strongest recommendation is to just close the contracts before the split, unless you know exactly what's going to happen. If you have experience trading for a long time, it's totally fine to hold the split, but just remember that everything is going to be like in equilibrium. So, there's no like major opportunity with these companies splitting. Everything is really going to remain equal. Typically what happens with non-standard options is they have typically less liquidity and larger, bid and ask spread. So that can be an issue, but I would say overall the best thing to do is to just close the contracts before the split. As we get closer to the split date, there will be more information available to everyone how the non-standard options will be processed for Apple and Tesla. So,
And I would have to guess that the implied volatility will probably end up tanking after this split, kind of like with earnings. Would you think that would happen as well, just based on all the perceived movement and stuff based off of the split going on recently?
Yes, I agree with you, but I wouldn't say it's directly because of the split. I would say that it's because of the public's reaction to the split. Like,
Yeah.
when you see companies splitting, it's not normal for their stocks to just explode like we saw with Apple and Tesla. So I agree with you, Tom. The IV can definitely take a beating, which is not a bad thing at all. It's actually a good thing, especially for traders. But I would say it's not going to happen because of the split. It's going to happen just because what happened with Apple and Tesla running up so much.
Yeah,
So,
that makes sense.
yeah. So, with that being said, do you have any last minute stocks, options, or any insight for tomorrow?
I mean, really, my biggest things I'm going to be watching this week are going to be NVDA and AMD, and even Qualcomm, QCOM. I really like these tech stocks this week, and I mean, even with Apple and Microsoft having um, kind of like that little tech stuff going on in court, where Microsoft and Apple might start getting into a court battle with each other. I'm going to be watching for that this week, as well as just the big tech stocks with NVDA. Obviously Tesla, Qualcomm, and AMD. I really like these stocks, and they're getting really close to their highs. And I just really, I'd really like to see these stocks kind of, pop up a little bit more and maybe kind of retest their highs. And if they do, then that would be a great opportunity for us.
Absolutely. So, great insight there. I'm very excited for the market this week. I'm very curious to see how Apple and Tesla react this week with just the crazy run up that they've had for the past 2 weeks. So I'm very excited for that. As always, thank you guys so much for watching this video to the end. Tom and I really appreciate all the support you guys have been giving to the channel through the form of hitting that like button, commenting down below, and subscribing. Even if you guys just leave a little comment down below, it really helps us. And of course, hitting that like button really helps too. So thank you guys so much for just supporting the channel. If you guys want to get the option swing trades that Tom and I follow every day, you can click the Stocked Up Options Alerts link in the description down below. And if you guys have any questions, let us know in the comments down below. Other than that, thanks for watching.